Good afternoon, ladies and gentlemen. Welcome to the second annual Mid-Atlantic Small Business Summit. It is about to be 3 o'clock, so we're going to go ahead and start with our first workshop, which is financing small business. We have some amazing experts here. So I hope you'll enjoy the panel, and we can go ahead and get started. Thank you again.
Hello, everybody. I am the designated moderator for this panel. My name is Miriam Eamon. I'm the Lender Relations Specialist for the DC District Office with the SBA District Office in DC. So today's panel is on, there we go. Today's panel is on access to capital. So as we know that the majority of the audience out there are a small business community, we want to make sure that you guys have a good understanding and you know what tools are available for you when you're in a position when financing is going to be required to expand or grow your business or start your business. I'm going to sort of facilitate, but I think everybody's going to, they're pretty good on their own. So I'll start with talking about what the SBA does in terms of the financial in terms of the SBA loan programs. And then after each panelist, if you guys have any questions for that panelist, please feel free to ask your questions then. And then if there's any time left over at the end, if anybody has any follow-up questions or anything like that, I'd be more than happy to facilitate with that. Okay, so SBA, so is everyone familiar with what the SBA loan program is about or what the SBA does? Has anybody got an SBA guaranteed loan? No? Okay. Well, so the main misconception is that, it's a small business association, or there's a number of different names it's called by. But we're the Small Business Administration. We're a federal agency. We don't make loans directly. We provide a loan guarantee program through our banking partners, which actually all three of my fellow panelists are also banks with SBA. Sorry, our SBA guarantee lenders. They provide the guarantee program. So if you are interested in applying for an SBA guarantee loan, or you think you might be required to have one, you wouldn't come through the district office. So we get a lot of calls about people who are interested in getting financing, but they call us to ask about the application, et cetera, but the main, we want to make sure that you guys are able to navigate through that channel. So if you are interested in getting through a loan through SBA, you're going to have to go directly through a participating lender. I brought in some resource guides that should be available, I think, on some of the tables outside. But if you guys are interested in knowing what lenders are out there and what the SBA loan program is about, that's a very concise and complete description of what SBA does across the board. So not only just in terms of our SBA loan programs, but our government contracting program, our government contracting facilitating program, as well as our resource and counseling partner programs. So how the SBA loan process works. Sorry, I don't think I could take that any further. How the SBA loan process works. So you apply directly through a bank. The bank has the authority to either approve or decline your loan guarantee. Of course, following SBA's Code of Federal Regulation. I'm not going to go too much into each specific loan program because we have these three gentlemen who each kind of, have their expertise in different factions of SBA's loan program as well as their own respective loan programs. But I'm just going to go over kind of what the main qualification criteria is for the SBA loan guarantee program. So the bank is going to make your decision. Your lender is going to be the one that is going to facilitate the entire process for you. So they're going to take the application, they're going to review it with you, they're going to be the ones that make the final decision, and they're going to service the loan for you as well. Banks, and then once the bank makes their decision, they submit their guarantee request to SBA. So one of the other misconceptions always with SBA is that it takes a lot of time, and I'm sure everyone can attest that it can take a little bit of time, but if you have a very thorough package and you have all the documentation that is required and you've communicated this with your lender, we can definitely make that process much more smooth and hopefully cut down that time frame for you. Oops, sorry, it's not going. Okay, so when would the SBA Guarantee Loan Program become necessary? So the SBA Guarantee Loan Program, it's essentially a program it's essentially a tool for businesses who have a high likelihood of succeeding, being able to get access to capital on equitable terms. So These are some of the instances. I wanted to give an example of when your lender might not be able to finance your loan under their conventional terms and require SBA to kind of step in and facilitate with providing the guarantee for them. So if you're a startup business, if you have, for instance, a lack of collateral, your collateral requirements aren't necessarily what meets the lender's requirements. If you have lower than normal equity down payment, if allowing you to get a longer term and helping you with your cash flow is going to facilitate with that loan approval. Those are sort of some of the instances in which an SBA guarantee loan program might become necessary. Okay. So this is kind of the motto that we live by, and we try to, I'm sure our lenders can definitely attest to this as well, but SBA will not make a bad loan good, but it will make a good loan possible. So the SBA guarantee loan it's like any other business loan. If anybody's gone through the business loan process, it's much more intrusive than a personal loan, much more intrusive than a home mortgage loan. But the SBA guarantee loan, similarly, it's the same thing. It's a small business loan, and it has the same process. So just because it has an SBA guarantee tied to it doesn't necessarily mean that you're going to be automatically eligible for the SBA guarantee loan. But if you have a likelihood to succeed, and for whatever reason, on the past slide, you weren't able to fit into the lender's conventional model, for whatever reason, if SBA is willing to guarantee the loan, and your loan and the approval is going to be made possible, that's what the purpose of the SBA is. And if I go too fast, or if you have questions, please feel free to ask me at the end of my show over here. So the SBA's purpose, again, is to help small businesses with a reasonable chance of succeeding, get terms on equitable, get access to capital on equitable terms. So we want to make sure that you guys know that if you are in a position where you need access to capital, that you don't necessarily always have to go to factoring or go, get like a payday loan, which I don't assume you guys will do, or get into some term that's going to put your position or jeopardize your business's profit and your business's success. There are a number of resources out there for you, and again, the SBA wants to make sure that there are equitable resources out there, that they're fair, and they're not going to be something that's going to, scam the applicant. So we want to make sure that everybody kind of utilizes and exercises their right as a consumer to ask their lenders exactly what the terms are, and ask questions about what are your options out there. What is your SBA option? What is your non-SBA option? One might be cheaper for you versus the other. So we want to make sure that you definitely do exercise that. The benefits to the small business, again, it allows for flexible financing alternatives, allows for longer terms and lower payments, and the equity and down payment requirements, I think, are the biggest thing, because it can help out with cash flow, and if you don't have the equity collateral requirements, SBA can definitely step in and facilitate that. But the key here is that with the SBA guarantee loan, so as I mentioned, when an SBA guarantee loan might be required, you can't have all of those scenarios. So you can't be a startup, you can't be a startup and have no collateral and, not have any equity injection and expect SBA to guarantee the loan. You got to have one of those, but everything else in the package and all the other 6 C's of credit, I'm not sure if you guys have 6 or 5, 6 C's of credit have to be stellar. Okay. So for eligibility for SBA guarantee loans, we only do loans to small businesses. So this is based on your North American industry. Guys, help me out. Your NAICS code. I always forget these acronyms because government has so many, but you have to be a small business based on your industry. For the most part, we don't really run into too many businesses that are going to exceed that limit. And you have to be a for-profit business, so we do not give loans for nonprofits. You have to be an applicant of good character. You have to have the ability to repay. And I'll go over good character. So basically, you can't be currently incarcerated or on probation. You can't have defaulted on any federal tax liens, student loans, if they were Sally Mae or anything like that, any sort of government assistance facilitated, if you defaulted on that, it's going to make you ineligible for an SBA guarantee loan. However, if you do have tax liens and you are current on your payments with the IRS, you can still be eligible, correct? Have feasible business plan. You have to have management expertise, adequate working capital. Must be a citizen or legal resident of the United States, eligible, and it must be an eligible loan use of proceeds, and your credit history is obviously going to be a factor. Okay. So eligible use of loan proceeds, an SBA guarantee loan can be used for real estate, for purchasing land or building or construction, purchasing of fixed assets, inventory, working capital, etc. And the one thing I want to highlight is franchises. If anybody is interested in franchising, if you think that you might be required to have an SBA guaranteed loan, we want you to make sure, I didn't even introduce you guys, I'm so sorry. I completely forgot about it, but I will after this. But if you are interested in franchising, you want to make sure that your franchise has a guarantee, or I'm sorry, has an agreement with the SBA, and you can check on franchiseregistry.com. Ineligible use of SBA loan proceeds. So any investment-oriented businesses, so you cannot use an SBA guarantee loan for like real estate investment, stocks, and bonds. Speculative-oriented businesses, fracking, R&D, etc. Businesses involved in lending, businesses engaged in indoctrinating religious beliefs. And usually the religious beliefs part is because most religious institutions are nonprofit institutions, but if you have a subsidiary that's a for-profit, that can possibly qualify for an SBA guaranteed loan. Private clubs or businesses, and it must be a legal business activity, and legal by federal terms. So I don't know if any of you are interested, but I know I'm sure our Colorado district office gets tons of calls about, medical marijuana dispensaries, and since the laws have changed within some jurisdictions, but if it's not legal under federal law, the SBA cannot guarantee it. So just in case you guys were curious, but just letting you know. And these are the 6 factors of credit. So again, if you are lacking in one of these, for instance, maybe you had a couple bad years in your business, you want to make sure that your overall loan package is going to be strong in all the other areas. And the SBA guarantee fee. So the SBA charges this because it is a federally backed program. We want to try to alleviate some of that burden off the shoulders of the taxpayer. So to alleviate that, we do charge the lender a guarantee fee, which can be passed over to the borrower. You can negotiate this with your lender. It can be between 0.25% and 3.75%. And it really depends upon the term of the loan and the term of the loan and the amount of the loan. So 2 things that just got extended with SBA, and what SBA is trying to do is really make a direct impact to those businesses that are requiring a small amount of capital. So if you're looking to get $150,000 or less, and you think you might need an SBA guarantee loan, your SBA guarantee fee is waived. So that has been extended for the next fiscal year. And if you are a veteran-owned business or the spouse of a veteran and you own a business, and if you go through the SBA Express program, which goes up to $350,000, your loan guarantee will also be waived. Okay. 7A, has anybody heard of 7A, SBA 7A loan program? Okay. So that's kind of our main loan program. Everything else kind of falls underneath it, with the exception of the 504, which Jason will cover, which is a very unique program. The main criteria for most of SBA's loan programs is that the maximum loan amount is $5 million. Repayment terms can be either on the short-term basis or between 5 and 25 years. If you're in manufacturing, energy sustainability, or international trade, that can be extended to $5.5 million. The average guarantee, I shouldn't say minimum, but average guarantee is between 75 and 85%, with the exception of the SBA Express, which is 50 and 90%. So what that means is that the SBA is guaranteeing that portion of the loan for the lender. So it's minimizing the risk on the lender's end, and it's allowing the lender to have additional channels of capital to be able to do more loans, facilitate more small business deals, and provide more jobs, obviously keep more small businesses sustainable. And your interest rates are determined by yourself and the lender. So I'm sure the lenders can, if you guys have any questions, they can definitely discuss it with you, but it's something that you can discuss with your lender. In that resource guide I mentioned, if anybody is interested in getting more information about this, they should be out there. If they're not outside on one of the stands, you can definitely find the information on sba.gov. And we've been working on our website for a number of years, but now it's actually, I think, gone to, it's definitely advanced a lot more than it has in the past. So if you click under local assistance, it'll give you a list of all of your SBA district offices, and click on the one that's closest to you, or whatever district that you fit into or your business will be into, and then pull down your SBA resource guide, and that can provide you with a wealth of information. So SBA's, again, so 7A is kind of the main umbrella, and everything else falls underneath it. I'm not going to touch too much on the loan programs. I don't want to exceed my time, but the main objective, again, of our presentation is to really kind of give you guys, some options for what is available out there for financing, because I think that's one of the main struggles that a lot of small businesses face, is getting access to capital or not preparing themselves in advance to where, if that contract goes through or if that deal goes through, what are you going to do if you, immediately need it? So hopefully we can give you some things to think about and help you guys prepare for once you find yourself in that position. Okay. And these are the SBA different programs. I'm not going to go too much into it. And I think I'm gonna start passing it over to you guys. I apologize for not introducing my panelists. I think I got frazzled a little bit, but anyhow, so myself, again, I work with the SBA, obviously, as I mentioned, but we have Jason Paisley, who's the Vice President and Loan Officer for Business Finance Group, which is a CDC, a certified development company, and they do 504 loans as well as Community Advantage loans. We have Justin Shutters, who is with Wells Fargo, Business Development Officer, VP at Wells Fargo, and John Osborne, who I had the pleasure of meeting today. I've talked to him a couple of times. He's Principal Vice President for Credit Officer at Burke and Herbert Bank. So my presentation's done, but if you guys have any questions for me, please feel free to, you can ask now or you can ask after we're all done, whatever is up to you guys. Do you have any questions out there? I went through it a little bit quick, I apologize. No? Anybody interested in getting SBA guaranteed loan? Okay. All right, I'm handing it over to you, sir.
Thank you. Yes, can I get a show of hands of any small business owners here? I guess, can you keep your hand up if you're renting? Well, the SBA 504 program, hopefully I'll be able to provide a basic understanding and dispel any misconceptions or objections to the 504 program and SBA financing in general. But the 504 program itself was created as an economic development tool. The SBA wanted to create a program that would allow business growth and expansion, the purchase of real estate while minimizing the out-of-pocket cash required to make that purchase, so businesses can hold on to that cash and grow their business, create jobs, and stimulate the economy. So the benefits are the increased tax base. The program itself is implemented through certified development companies like Business Finance Group. There are 260 CDCs like us nationwide. So you have to work with a CDC like us in order to get a 504 loan, also partnering with your bank on the transaction. Here's a sample of the standard 504 structure. We'd have our third-party lender or bank partner in first trust for 50% of the total project. We're in second trust position for the 40%, leaving the borrower with a 10% equity contribution. The bank is in first trust position, so they're very safe at a 50% loan to value on owner-occupied real estate. So they're going to give preferential terms. They're required to give at least a 10-year term on that first trust, which fairly common on conventional commercial financing. That could be a 5-year balloon. And then our piece, we are able to provide a 20-year fixed rate, fully amortizing loan. There's very few products like this on the market, especially with the 20-year fixed rate. We are bond funded, our source of funds. We have a monthly bond sale. All 260 CDCs pool their loans. They're closed every given month. Just before that funds, the SBA puts their government guarantee on that bond, which results in the below market interest rate. Our most recent sale priced last month, September, at 4.902%. So those borrowers would have 20-year fixed rate at less than 5%. We do price off of the 10-year Treasury, so as the 10-year Treasury fluctuates, our rate does as well. A lot of business owners have heard horror stories about the fees. They did yesterday total 2.65%, but as of today, the SBA has waived their 0.5% guarantee fee. So now the fees actually total 2.15% on our loans. Those get rolled into the bond and financed over the 20-year term. So that 2.15% results in an increase of the APR of about 0.25%. So you're still looking at less than 5.2% on an APR basis based on the revised fee structure with the removal of the 0.5% SBA guarantee fee. There's also a prepayment penalty. The program itself was really created to finance long-term homes for small businesses. It's not geared towards quick flips. So if you're looking to buy a property and sell it in 2 or 3 years, it's not the program for you. But as you can see, if your needs do change, the rate does decrease over that 10-year period. So after year 10, there's no longer a penalty. Even in year 5, it's less than 2% of the principal balance at the time of prepayment. Also, our loans can be assumed. So if a borrower sells a property, that loan can be assumed, in which case the prepayment penalty is also avoided. We have the same eligibility requirements that Miriam went over, except we do also have a job creation goal, 1 job created or retained for every $65,000 in SBA funding. If it doesn't meet that, we have plenty of other eligibility goals that we can meet, minority-owned business, woman-owned business, hub zone, things like that. As far as the eligible costs under the 504 loan program, it's really focused on fixed assets and the costs associated with that transaction. We can't include any working capital or inventory. We're really looking at real estate, whether it's purchase of raw land and ground-up construction or an existing building, renovations. We can also roll in a lot of the soft costs and professional fees, reducing the overall out-of-pocket costs to our borrowers. As far as the owner occupancy requirement for an existing property, the minimum occupancy is 51%. If it is new construction or ground-up construction, the borrower would have to occupy 60% with the intent to move into 80% over 10 years. So they wouldn't be able to lease more than 20% on a permanent sublease to a tenant. We also do require additional equity for startup businesses or special use assets, and that would include like hotels or gas stations. So if it's a startup hotel, then we would be looking at 20% equity. Also, as far as project size, our minimum would be a $200,000 total project. There's really no cap on the largest deal. Our portion is typically capped out at $5 million, but we can do less than 40%. So we've done $20 million projects where our piece was only 25% of the total project. I actually like this slide a lot. It's a comparison of conventional financing versus the 504 program. On the left-hand side, you can see the eligible project costs under the 504 program of $1 million, which includes soft costs, which typically you'd be required to pay for out of pocket with conventional financing. So on the conventional side, the borrower would be putting in 20% of the hard cost plus the $50,000 in soft costs for a total of $240,000. Where under the 504 structure, they're only putting in $100,000. So it's really not the difference of 10 and 20% when you're rolling in those soft costs. So here it's a difference of $140,000. We try to make the application as easy as possible. Typical items that are required for a traditional bank loan, tax returns for the business, personal financial statement, history of the business, plus copy of the cost documents, purchase contract. If we're looking at any construction, we would need some type of bids or estimates. Our process, we take about 10 days for us to internally underwrite and approve a loan. Then we package it and submit it to the SBA, and they're actually very efficient in this. They are responding in about 5 business days. So it's not too stressful of a process. Then Business Finance Group, the overall recap of the benefits of the program, you're getting 90% financing, including all of those hard and soft costs. You're getting a below market blended interest rate. You're able to hold on to some of your cash so you can grow your business and create jobs. And it's a relatively quick and easy process. Now, Business Finance Group, we were created in 1982. We've been operating historically in Virginia. We now cover Virginia, DC, Maryland, the Eastern Panhandle of West Virginia. We're actually the only fully staffed CDC in our marketplace. We do have a our approval team, credit department, closing department, and servicing department. So we have specialized staff to assist our businesses and bank partners throughout the process, since we do service the loan for that 20-year term. And I open up to any questions.
Questions from the audience? I had a quick question for you. So you mentioned, obviously, you covered 504. Thank you, because that made my life a lot easier. But are there any other sort of loan programs that Business Finance Group offers that are outside of SBA? Sorry, we're sharing this.
Not outside the SBA, but we are offering the ILP and community development, Community Advantage program, which Justin, they're a type of SBA 7A loan, which Justin will be speaking about. But also Amy Rowan, one of my colleagues here, will be outside of our table if you want any additional information on that. It's smaller 7A loans between $50,000 and $250,000.
And so I know that you guys were doing, you mentioned, I briefly touched on it, but you mentioned the extension of the SBA fee waivers. So are you guys doing something similar for the veterans program that you're involved with the SBA as well?
Yes. Under our trade association, we participate in a program called the Vet Advantage, which provides reduced fees to qualified veteran-owned businesses. So it makes it a little less expensive, encouraging veterans to finance real estate.
Any other questions? Okay, so I'm going to pass it along to Justin, and I just wanted to mention that the one thing, the interesting thing about this panel is you have obviously myself, who's representing the federal agency, SBA, but you have a very unique mixture of lenders. You have a CDC, a certified development company that has its own specialty. Wells Fargo, obviously everybody's familiar with their large national bank, and then Burke and Herbert, which is a community-based bank. So you have a variety of options, and I didn't even touch on some of the other stuff that SBA does. But if you have questions, my contact information will be in the resource guide, or I can give you a card afterwards. But I just wanted to kind of definitely note the diversity in this panel. So if you guys have any questions about your business, this is a great time to ask, because you have three different spectrums of that access to capital ladder, and myself, hopefully, if I can answer anything for you. Okay.
Thank you, Miriam. And I realize we have a lot of business owners here. We also have a lot of sales professionals here, but just a quick show of hands, who knows what WIFM is? Okay. What's in it for me? So what's in it for you as a small business owner in regards to SBA? Well, you get lower down payments. You get up to 85% financing for business acquisitions. You can do, like Jason said, up to 90% financing for real estate in conjunction with a traditional bank. And also up to 100% financing for partner buyouts. Real estate can be fixed for up to 25 years. 10-year fixed rate financing for the acquisitions and buyouts, which is typically difficult to come by if you're doing a conventional loan. The 504 real estate projects, they do come with 30-year amortizations. Working capital can actually be included in the acquisitions and buyouts. We tie that in with our 7A program. Another nice thing is no balloons, no calls, and no covenants. So it doesn't matter how big your loan is with SBA, we're not going to be requiring quarterly financials, annual financials. We're not going to need your tax returns after your loan is approved. Once we grant you the loan, after 5 years, it doesn't have a maturity date where you either have to pay us off or you have to refinance the principal balance. So it's pretty much one and done. And we also have blended terms available if you're doing both commercial real estate and an acquisition. And by law, Wells Fargo cannot charge points or packaging fees because SBA does not allow that. Right, Miriam? And well, I wanted to, but I did want to ask a quick question to the audience again. What are some of the common things that you hear about SBA? Either you've received an SBA loan, you know someone that's received an SBA loan or has went through the process?
I won't get offended. Please feel free to ask any questions.
Right? A lot of paperwork, all right? Fees? Okay.
Just a quick interruption, Justin. Ladies and gentlemen, if you have any questions, please raise your hand and we can bring you a microphone.
Right. And being that I work with SBA loans quite a bit, you know, I do hear objections from time to time. So like you said, a lot of paperwork, takes 6 months, sometimes longer to get approved. You have to be declined conventionally before you can get an SBA loan. Interest rates are high, and my favorite one, SBA stands for shouldn't be approved.
I haven't heard that one before.
Yeah. All right, well, SBA has undergone some changes over the past several years, and they've changed it to where more businesses are eligible, more banks and lenders are definitely participating. Wells Fargo does have a preferred lender designation with SBA, so we don't have to approve your loan and then send it off to the SBA to get approval. We can actually approve on the government's behalf, which speeds up the processing time. So most closings happen within 45 to 60 days. And SBA continues to streamline the paperwork process. So who's eligible for an SBA loan? Most for-profit businesses that are privately owned are going to be eligible. So whether you have a retail or service business, a wholesaler, you're a manufacturer, as long as you're for-profit, there's a good chance that you will be eligible. I would say a few things that are not eligible are religious organizations, just due to the fact that they're nonprofits. Any kind of association or charity would not be SBA eligible. We typically want someone in business at least 2 years, preferably 3. The only exception to that is if somebody is doing a startup, but they typically have to have quite a bit of experience under their belt in the industry and have quite a bit of liquidity in them, or cash. And there are some income restrictions, so if you're independently wealthy, we're not going to be giving Bill Gates an SBA loan, for example, but there are some minimum thresholds that somebody has to stay under in order to be eligible. So the 7A loan is kind of a jack of all trades when it comes to SBA, and you can use it for just about anything, really. One of the things, for example, are business acquisitions. So if you are, say, for example, right now I'm helping a independent pharmacy that owns 3 locations in Maryland, and they want to purchase another independent pharmacy located in DC. You can use it for that. That can also be considered an expansion as well. Partner buyouts. So many small businesses have 2, 3, 4, maybe even 5 partners with the business, and let's say one of the individuals wants to exit the business or they want to retire, and you have to buy out their equity in the business. You can use an SBA 7A loan for that. Ground up construction. Now typically banks get very leery about making loans for raw land, and then you say you're going to do construction on them. Conventionally, I'll just fully admit it, a lot of banks don't like to do that. However, you can do that with an SBA 7A loan. And just to give you one example, I'm currently working with a garbage disposal company in Manassas, and they want to purchase raw land, and they want to build servicing bays to service their garbage trucks and also office space. And the total thing is going to be about $2.4 million, and we're looking to finance up to 85% of that. Next thing is refinancing of existing debt. And there are some restrictions with that. However, if you have, a good example is any kind of existing loan out there that you have taken out several years ago, and you want to get it in at a lower rate before interest rates start to rise. I know us bankers have been saying for 3-4 years now, interest rates are bound to go up at any time, but it may actually happen this fourth quarter, I swear. And so one example is I'm currently working with a bath and tile company in Maryland. They took out, it was actually an SBA loan about 8 years ago, and the interest rate was over 8%. And they had a 10-year prepayment penalty on it. But what they're actually interested in doing is just refinancing the principal balance with another SBA loan. As long as there's at least 10% savings by doing the refinance, you can refinance an SBA loan. And equipment. So essentially anything that has a serial number and can be moved could be eligible for an SBA 7A loan. Trucks, vans, if your business has a Ford F-150, you can actually use SBA loans to finance that. And business expansion. So for example, if you have one existing location and you want to expand to a second location, 7A is a good candidate for that. Right now, working with a dentist in Woodbridge who wants to lease a new location in DC, and she wants to finance it with SBA to get the build out and also equipment she'll need for a new office location. Like Miriam mentioned, you can do franchise purchases and even startup franchise purchases. So there's not too many banks lining up to do startup franchises or finance startup franchises. There's actually a list out there of over 1,700 approved SBA franchises that are eligible to lend to. Give you a few examples. I've worked with Dairy Queens, Burger King, Wendy's, McDonald's. Those are some of the more common ones. And depending on the franchise, you can actually get up to 85% financing, especially if it's a second location in regards to franchises. And also build out leaseholder improvements. So let's say you purchase real estate, you need to knock down a wall, you need to build a wall, you need to do some paving in the parking lot. You can actually do a 7A loan or incorporate the cost of that into a 7A loan, even if you're leasing the space. A few of the highlights, just overall, maximum loan amount, 7A loan amount, it's $5 million, 75 to 100% financing. Terms can go out to 25 years. Typically they're fully fixed, but there are some circumstances when the rates are adjustable, especially when it comes to franchise loans. Fully amortizing, so again, no balloons, no covenants. And real briefly, Jason already did a great job at explaining the 504 loan program, but essentially we will do 504 loans. We provide the 50% financing. Jason and his group would provide the 40%, and then we would do the 10%, or you would do the 10%, I'm sorry. Cash down is the payment. And there are a few prepayment penalties with those types of loans, typically for the first 10 years. So why is Wells Fargo America's #1 SBA lender? Last year we closed over $1.2 billion. We are the #1 SBA lender in the country as far as dollars and units. We're also #1 in the state of Virginia as far as dollars lent and number of units. We do lend in all 50 states, and even if you're local to this area and you wanted to do a 7A loan for something in Ohio, even though I'm local here to the DC area, I could still assist you with that. Again, we are a preferred lender with dedicated staff, so we do have underwriters and closers. The only thing they do are SBA loans, so they don't go from underwriting conventional loans one day, then the next day they go to underwriting SBA, so they're very well versed. We are a portfolio lender, so we do retain the loan, so we're not going to sell it off to another lender at some point. So all the servicing will be done and kept with Wells Fargo for the remainder of the loan until you pay it off. And any questions, you can certainly feel free to email or call me or see me at the table outside.
A question for you. Any questions for Justin? No? Okay. So you mentioned you guys are a preferred lender, and so what that means is obviously they have delegated authority. There's different levels of delegation, either SBA Express or PLP lender, et cetera. Wells Fargo is both. So is there any instance where you cannot make a decision or approve a loan on the SBA or the government's behalf?
I would say the most common circumstance is if someone is trying to refinance a prepayment penalty. We do have to take that directly to the SBA for approval, and that will add approximately an additional 30 days' time on the loan process.
If I could just back that up with one more question. So I'm sure a lot of people, I've heard a lot of businesses who, one of the main complaints is that they don't really understand the process. They're kind of just, rolling with it as the lender is giving them paperwork. So what can they do to make their lives easier and hopefully make you guys' lives easier in terms of preparing their loan application? Like, what sort of relationship should they have with their banker? And any of you guys can jump in on that one too, because I'm sure it's different at all levels.
Yeah, I would say having your CFO, if you have one, or your CPA intimately involved. If you can share their contact information, so if we're asking for interim financials like a balance sheet and income statement, we can just communicate directly with your CPA, and that typically makes everyone's life a lot simpler, as opposed to the business owner going into their QuickBooks and trying to prepare those financials themselves.
Any other questions for Justin? He is with Wells Fargo. Sorry, I'm soliciting all of you guys. Okay, so we're going to move on to John Osborne, the Principal Vice President and Credit Officer at Burke & Herbert, a local bank in Virginia.
Oh, thank you. Yeah, we are a local bank, community-sized bank. We have 25 branches in Northern Virginia, and these programs have a lot of details. Get familiar with them, but you don't have to know it. Find your banker. Talk to your banker. Get your financials together. Go out and talk to them first. Find out what your needs are and talk to them. Can you hear me okay? All right. Thought she was pointing at me.
Oh, no, I'm sorry.
Anyway, establish a rapport. The other thing I'm going to tell you is something banks never tell you. Get two opinions. It never hurts to get more than one opinion. Banks are looking for customers. We're going in and out of it. It's a tough market. You're a valuable entity. You're something a bank wants to talk to, wants to go through. Visit all the bankers here. Visit your own bank right now. Call first, get your financials together, and go out and talk to them. I would not personally worry about a lot of the details or filling out all the forms that you're going to have to fill out. First, talk it through and find out. You may have several alternative financing that might be available to you besides conventional. That's pretty much all I got. I don't have a PowerPoint. I apologize for that. But it is a personal approach I think we try. And the first way you start is go to your local branch and ask for your commercial representative. They'll set you up, believe me. Every bank's hungry. If they're not hungry, find another bank. They'll be happy to talk with you. Any questions? I know I didn't add much, but this was a lot of detail, and I kind of focus broad picture and bring your information in, and you can get down to brass tacks with your banker at that point. Anything?
Well, John, you actually hit on a good point. You said speak to a couple of different lenders. So that's a great, I think that's a great suggestion, and something I always recommend to borrowers is that, one, have a couple different relationships, because depending upon where you're at the life of your business, if you're a startup, if you're a few years into it and you're looking to expand, at each different level, and maybe each even different instance, there might be a lender that's not comfortable with what your situation is. So I wanted to ask you guys, is there anything you're not, any industry that you kind of stay away from? And my point in asking that question is to show the diversity in lenders. Some lenders don't want to deal with franchises. Some lenders don't want to deal with restaurants, transportation, et cetera. So each lender is going to kind of have their comfort zone in terms of taking risk and what industry and what phase the business is in.
Well, I would say that's why you do want to talk to a couple different banks. Some banks may stay out of an industry or be better at a certain industry as opposed to other ones, and they'll tell you. They'll if you ask them, sit down and go over everything, they'll tell you. Most banks, they'll want to do a good deal. They want to find out a good borrower, a good customer. They're going to want to do something like that. But if they do find a situation they can't handle, I know the bank I work for and the banks I have worked for, we try to offer alternatives. If we can't help, we don't like to just tell someone, no, we can't help. We try to give you alternatives. What else is out there? It might not even be for us, but it might be beneficial to you.
I'd say a lot of times that car dealerships can be kind of difficult unless they're a very large franchised car dealership. But unfortunately, the smaller mom and pop shops that just have one lot where they have a few dozen cars, that's kind of difficult to lend to.
Yeah, I don't think we really have any industries that we're shying away from as long as we have experienced management or experienced owner in that industry. We always talk about, the doctor that decides he wants to open up a restaurant, so that's something that we typically would not do unless there was, a background and some type of management history. But we can do pretty much everything: hotels, gas stations, restaurants, everything.
And one thing I didn't, because I breezed through my presentation, was I didn't get to mention is that the other component of SBA and what one of our other products is that we offer, services that we offer, is our resource partners. So if you guys, has anybody heard of SCORE or the Small Business Development Centers or Veteran Business Centers? Okay, so these are your tax dollars at work. So take advantage of them. It's free business advising and free business counseling from people who've been in your industries, and there's a number of counselors at all the different resource partners. These are all, again, located within our resource guide, but there's a number of resources there for you if you are a small business owner, no matter what stage of your business you're in or what life cycle of the business that you're in. But there is someone there to give you kind of a second look, a glance at your overall loan package, as your application. Most of our counselors have a relationship with our lenders, and most of our counselors were lenders before, so they understand what the loan process is. So I highly encourage you guys to find whatever center is closest to you. Again, there's a number of them. You can obviously, this is we're flying through all these details, but if you have questions, feel free to give me a call, send me an email. I'll be more than happy to send you that information. But again, these are resources that you're already paying for with your tax dollars, and I recommend anybody take advantage of it. And I didn't go into it too much, but we also do have a micro lending program, Community Advantage, as Jason mentioned. They are actually one of our Community Advantage lenders. So if your business might be in an industry that's kind of, maybe has its own quirk, or you're at a stage where you really aren't going to qualify for a conventional loan or even an SBA guaranteed loan through one of these lenders, and you only need a couple $1,000s, like I've spoken to a number of app developers, coders, from the IT world, and they've utilized the microloan program. So there's a number of different programs out there for you, no matter what you're doing. So we just want to make sure that myself as a SBA employee, I want to make sure that we're helping you guys navigate through those channels, and just to show you what the diversity and the different options are at each stage of your business. So does anybody have any questions? Yes, sir. I'm sorry.
Here's
Bringing you the microphone. Sorry.
What are the biggest challenges when you're lending money to the borrowers? Between the borrower and the lender?
You guys want to take that?
If there are challenges.
I would say it's information. As if you can pull together as much information, financial information, business plan, as complete a package as you can after you've decided what type of financing you'd like, that helps streamline the process for any bank. They can move faster than, as opposed to if we're waiting for information, the information we have on hand gets dated and we need that updated. That's a huge challenge, I think. So the more information, the more current information, and the most complete, I think, is the biggest challenge that I've faced.
Yeah, I would second that. It's sometimes it could be lack of commitment. We do understand that everyone is very busy, working 60, 70 hours a week, and that's why I always recommend everybody, or almost everyone, has a CPA or a CFO that may work in your organization. You can delegate those responsibilities to them because they probably have just about all the financials that we require in order to get an application going. But just making sure that you delegate to the appropriate people, and then you're staying on top of them to get the information to us.
Yeah, I agree with those comments. It's very important that we have accurate and timely information, primarily financial statements, personal financial statements. If you're coming in for a loan, we don't want to see a financial statement, that's a personal financial statement that's a year old. We need something current that is accurate so we can make decisions.
I'll plug again our resource partners. Again, so if you maybe are great at what you do, but you're not the best bookkeeper, SCORE, Small Business Development Center, Women's Business Center, there's a variety of resources, either direct partners of SBA or the SBA has a relationship with, and even at your economic development centers in your respective communities that you live in, there's going to be a number of different business advising, but they can help you with that, with the bookkeeping process. They can, provide you assistance with that, so definitely utilize that. Any other questions for the gentleman?
I've
Yes,
got
sir.
one,
Please.
sir. What do you view as the biggest challenge from your point of view?
I mean, I'm getting ready to increase my business, but I just wanted to get to know this information.
Can he, for instance, what you're doing, that question is a perfect question.
It was a very good question.
Contact
Thank
your
you.
lender. Ask as many questions as possible, I would say, to any of these gentlemen here, myself, but you have to have that relationship with the lender, and obviously the more questions that you ask them, the more clear you're going to be about the process, and the faster it's going to be for you. You guys want to add anything? Okay, so we're done. So if you guys have any questions, please feel free to contact any of us. Thank you guys for attending. Thank you for my fellow panelists for attending. And again, we look forward to seeing you guys be very successful. Thank you.
Ladies and gentlemen, that concludes our first workshop. We have a 10-minute coffee break. Please enjoy the refreshments in the hallway. Rock and Joe Coffee, our diamond sponsor, has freshly brewed coffee, so feel free to stop by their booth. Our next